What is going on out there, peeps? All right. A lot of people ask me the questions about the 401ks because I bring it up all the time. There's a reason for that. 2008, I did a video. I mean, not in 2008, but I did a video about people losing more than half of their funds in their 401ks and their retirement accounts because they weren't protected with precious metals. And it took a shellacking. So they lost like more than 50%. And then the rest of the money they end up spending waiting to get a job. So just don't get yourself in that position. Right? So can I lose my 401k if the market crashes? Of course, we know that answer. This is why you need this, gold and silver. You can buy physical gold and silver here and they will ship it to you and you'll have it at your place. So go over to Money Metals and buy some gold and silver for yourself. The link is down below underneath the video. If you are a first-time buyer and you spend more than $100, use promo code Pimpy, P-I-M-P-Y, and they'll give you a free ½ ounce of silver. For those of you looking for my address, there it is. You guys know I got this other channel. I've been putting up some good stuff on there. Today I showed you guys undeniable proof that there was no insurrection. I was there on January 6th. Go see the truth. Go support our friends at Wall Street Silver, both their YouTube channel as well as their Reddit page. They're helping spread the word about silver. This is disappointing. I got to be honest with you guys. I was expecting crypto to start to make a run, and it's not doing anything. Not doing anything at all, besides losing. Now it's down around 31,000. Again, I'm going to chalk it up to, we're just waiting for these people to bring over the mining equipment. But I was expecting them to make a run to try to discourage people from running into precious metals. It's kind of weird that they're doing the Basel 3 on a Monday and not a Friday. Very interesting. Still a lot of talk about what might happen. It's just chitter chatter, but we'll see. There's a lot of speculation. So if you remove the things that allow them to manipulate, well, if you remove the tools that are used to manipulate the market for gold and silver, then what happens? It should shoot up. So there's a lot of talk going. I'm anxious to see. But man, there's a small part of me that kind of goes, oh, not yet. I want to keep stacking more. So look at this. Can I lose my 401k if the market crashes? We know it happened before in 2008. Okay? So here it is. Yes, the thought of losing your 401k is even scarier. But can you indeed lose your 401k if the market crashes? What will happen? So, explains what a 401k is, but over here it says, can I lose my 401k if the market crashes? Yes, you can. However, only if you've made bad investment choices. Allow us to explain. Say the stock market crashes. Okay, it crashes. In the first case, your portfolio consists primarily of stocks. Well, in that case, your 401k will most likely crash as well. When the market crashes, the value of the shares will go down. Experienced investors know how to benefit from the situation. As equities will be on sale, investors will start investing in the stock market again, thus expecting to make a profit when the stock market regains its powers. So on the other hand, say your portfolio consists of 50% stocks and 50% bonds. If the stock market crashes, then only half of your 401k will crash. The rest will most likely not be intact. Or not be intact would be intact, I would imagine. So it says, like how it says, the rest will most likely, doesn't say for sure, most likely. So the rest most likely will be intact. Typically, when the price of stock goes down, the cost of bonds go up. However, historically speaking, the stock market has shown to rise back up after a crash quickly. No, it doesn't. Well, let me reword that. Are we talking about a flash crash or a real crash? So you have to be extremely careful with what you do. If you want to know, are bonds safer than stocks? Click there. Okay. So this person's saying, look, you should have 50% stocks, 50% bonds. It's kind of like hedging. So when the market crashes, the bonds go up, is what they're trying to say. Except for we're in a very unique time right now. Bonds are not safe. As a matter of fact, people are getting the hell out. There's a bubble, a bond bubble, a real estate bubble, a crypto bubble, a stock market bubble. Never in our history have we ever seen such a craziness, and it's worldwide. That's what happened when they forced all these people onto this reserve dollar. So anyways, are bonds safe? I don't know. Let's listen to the big dog.
Individual investors should stay out of bonds.
That's what I just said.
If you have them in your portfolio, either bail out or make sure the maturities are no longer than 3 years. Now, some institutional investors, such as insurance companies, have to purchase bonds for regulatory purposes, but not individuals.
This is Forbes. He's telling you this is a unique time.
Because the great bull market in bonds that began in the summer of 1982 is over. Treading water is the best that bondholders can hope for now. Until recent months, bonds have been a positive investment, but that is changing.
Heed his words. This video was posted on May 4th, 2021. He's telling you it's changing. The bonds are not safe anymore.
Interest rates on treasuries have gone up from where they were in 2020. That's a sign of trouble to come. But because rates are still extremely low by historic standards, many investors have been reaching for yield by buying bonds of less than stellar companies. The yields they're getting on this paper, however, are way too low considering the risks they are taking. When the economy slows next year as the sugar high from all that government spending wears off, many of those shaky companies will falter, and the bonds they issued will default.
That's right. The bonds will collapse as well. So, is bond the right choice? So 50% stock, 50% bonds? No, it's not. So maybe if you want a diversified portfolio, you do something along the neighborhood of 30% stocks, 30% bonds, and another 39% gold and silver to really protect your portfolio. Diversifying is fine. If you can't afford to lose 30% of your retirement savings, today you must own gold. This article is older. It's like 3 years old. Said a customer of mine at 55 years of age recently asked me if it was not too late for him to own gold. No, it's not. It's never too late. The answer is no. Quite the contrary. With the market showing the early signs of correction, it is, in my humble opinion, the perfect time to invest in precious metals. The first rule of successful investing is to buy assets on the cheap, the dip, not when they're peaking. You must invest. Most investors would rather buy Bitcoin when it hits 19,000. I'm sure they would now. The reality is that stocks and bonds have been in a major uptrend for 9 years for stocks, 20 years for bonds. That's a bubble. And are overdue for a correction. Gold, on the other hand, peaked in 2011. No, actually peaked last year. So this article is old. The point being, you should protect your portfolio with precious metals. Period. Let me show you something. So when they talk about the big crash in 2008, you guys see me do the video where the people come out and they're talking about what happened when people lost like 50% of their portfolio. Okay? So this is around the time. You can see here the stock market was rising. You're looking at 998. That was the Dow Jones. Then all of a sudden started to show a little trend, and that was back on March of 2008. And all of a sudden it started to buckle just a little bit for the month, and then started to go back up, down, up. And you can see here in July of 2008, it's now at 957. And then all of a sudden, boomy. 200 points, more than 200 points. Now, it doesn't sound like a lot, but keep in mind, the stock market at the time was only 900 points. So 200, over 200, almost like 250. You're talking about, almost a little over, what is that, over a fourth? 250? No, actually, yeah. Almost a third of the money gone in this crash. Now, eventually it does rebound, so keep this in mind. So this is up here, starts to teeter around March of 2008. It's here in October. So 7 months. It went from being up here around, where are we at? 998 down to 716. That's a pretty big drop if you look at the overall percentages. But that's okay. You can see what happened. The market eventually rebounds and starts going up. Okay? Now let me show you something. So here you are at the top. Nope. Let me redo it. This one. I was wondering why it looked too small. My bad. So this is the Dow Jones. When the crash happened, let's take a peekaboo. So here we are. The stock market was 14,093. See this? As of October the 7th. So the real crash really didn't start to take place until about right here. So here we are. Here we are. April 2008. We're at 13,058. Just a little under a year later, you're just about half your money's gone. See that? It just kept dropping and dropping and dropping. Again, here you are, April 27th, 2008, 1305. Here you are on March 1st, 2009 at 6,626. That's more than half your money gone. Remember I showed you the video where the lady was like, yeah, their 401ks, more than half were gone. And then the other half they blew through because they used it to live on. So how long did it take for it to rebound? So we're at 13,058. This is July 27th. So close. 7/29/12. So you're looking at just over 4 years before it rebounded to where it was. And even then, to drop back down again, if you come over here, look at, so 13 before it started going back up. So 13,058, yeah, you're probably looking at somewhere in 11/25/12. So somewhere in November 2012, from April 2008. So again, you're talking about a good 4 years it took for it to rebound. 4 years before the market rebounded, that is. Now look at gold. So April 2008, it's at 923. The market starts to drop. What you're seeing here is this. The gold does drop with the market. Diablo brought that to our attention one time. Remember that? So it does drop. Okay, let me show you why. So you're sitting here, you're accumulating. The stock market crashes or starts to crash over a period of time. What's happening as your 401ks go down, no problem. But as it's going down, remember, it hit rock bottom when? Was it October 2008? You're still up here. And then all of a sudden, your stocks and your portfolios starting to disappear. You start cashing in your precious metals to help pay for bills. So you got a little bit of a drop here, and it drops down to here. So you're looking at, on July of 2008, it was 959. By October, which is 3 months later, it's at 716. That's what I was trying to talk about earlier. So, it's almost about a third of your money is gone. Okay, but that's in a couple months, just like the stock. But let me show you the difference. Remember, it took all the way until when? November of 2004 for it to rebound? November? So here's gold again when we started, which was right here before the little crashy poo, or we can go all the way to April. Don't make a difference to me. So where was it? Because remember, we started in April. There you go, April 27th. There we are. We're at $856. How long did it take? We're at 427, 856. So 427 to 1209 took about, what is that, about freaking 8-9 months, maybe not even 9, like about 8 months for it to get there. So you recouped your money in 8 months, not 4 years, 8 months. Remember, you're here at the tippy top. 427.08. Yeah, 13.058. So somewhere about November 2012. So we'll go with November 2012 for gold. Let's see where it went to. So here we are. We're at 427. So let's keep going, and we're going to go to November 2012. Gold at $1,727 from 900. So it almost doubled in that same length of time. See, it does take a drop, but it recovers quickly. That recovers within a couple of months. Not like the stock market. But you can see in the same length of time, the gold had doubled in value before the stock market even got equal to where it was before the crash. Do you see why you should hold physical gold and silver? To protect yourself? There's another crash coming. There's no doubt about it. The thing is, are you protected? Are you protecting your retirement account? So just took me a long way to prove it. But what I was trying to say is this. Look, when the crash happened, you can see how long it took for it to get even. Here we are in April. We're at 13,058. You can see it all the way over to the right. The date's down below in the black, 427.08. How long did it take for it to reach 13,058 again before it went up above that? You get the point. I'm not going to get right on it, but it's over here in about November. Okay, there it is. November. So that's a long time, man. That's years. Years and years away for your portfolio to rebound. When it took, in that length of time, gold had doubled. So when I say that during the market crash, you can protect yourself. That's what I'm talking about. And even though gold came and settled back down, so where was its high? We'll take a look at its high. Well, so we're at 17,904. Okay, no problem. Meanwhile, it got down here and accumulated, but look where it was down here. You're still way above it, even at its lowest point here, which is 1,084. You know what I mean? Yeah. Let's get the lowest part. 1,076. Yeah, it's about $100 gain there. But the point is, you can see this in the cup formation, how it's going up. So we don't know what's going to happen for Basel III. The point I was trying to make is this. Gold and silver protects your retirement. It recovers quickly. Silver outperforms gold during the crisis, but it goes up really fast and also comes down really quick. So you got to pay attention to the gold-silver ratio and know when to swap and trade in and get gold, because gold goes up real slow and then goes down real slow. And then you want to hold on to your precious metals. You only need them when there's an emergency or to pay off all your bills, but hold on to the rest of them just in case and continue to add to them. Okay, you can see ever since, geez, I mean, at least this chart goes back to 2000 when gold was $264. Damn. In 21 years, it's damn near, was that 9.1%? Or my bad. It's not 10 times as much. It's only about 9 times as much. So not too shabby in 20 years. You need gold and silver to protect your portfolio. You just seen this over here talk about, can your 401k crash? Yes, it depends on what you're invested in. And even if you do have stocks and bonds, and the bonds might protect you, but we're in a situation right now around the world where it doesn't look like bonds are going to be the safe bet. This is why you see central banks and the so-called elite all buying up all the gold and silver as much as possible. They know what's coming. The one thing that's going to protect them and you is precious metals. All right? So, do yourself a favor if you haven't done it already. Get about 25-30% of your portfolio. Move it into gold and silver. Reach out to Money Metals Exchange. Let them know Pimpy sent you. 800-800-1865. Ask them the questions. They're more than happy to help you. This is what they do. They're professionals. So protect yourself is what you should do. But on top of just protecting yourself and preserving your wealth, we are in a unique situation where we might actually become wealthy of what you're holding. We're talking about some astronomical price jumps here. Even if you did it on a conservative side, let's say silver goes up to $100 an ounce. No, I don't think anybody thinks that's going to happen. I think it's going to go up in increments. I don't know if there's going to be any major jump on Monday. I have no idea. I think it's going to take about, from this Monday when Basel III kicks in, give it about 2 weeks before it really starts to run. There needs to be some kind of delay time. That's what I'm watching for. All right? So, do yourself a favor. Protect yourself. Basel III is Monday. The 28th. You can go to Money Metals website and start buying your gold and silver now. All right? Anyways, I just wanted to share this with you. Let me know what you think. Hit the thumbs up button. If you're not a subscriber, please do so, because when you do, it helps out the channel. And I surely do appreciate it. I'll catch you later. I'm out.